Hey everyone, me Kevin here. Why did the market fall into the close today? And yes, we are on autopilot, so thank you Elon Musk, while we focus on the road and explain what the heck happened in the market today and what you've got to pay attention to this week, because it is weird. It is almost just as weird as the phantom braking happening right now, but it's okay. We'll get through it. Okay, so first things first. The market sold down almost all day long. Why? I mean, you pretty much had a slippery slope on the Qs. First of all, we had euphoria in the morning because oil prices collapsed. That usually implies more consumer spending because people have more money for stuff rather than money for gas. Okay, this is simple. And lower geopolitical tensions because maybe now the Iran-Israel counterattack saga is over. Maybe. That's all hopium, okay? Whatever. As that faded, markets began, maybe at the same time, to start going, oh, dang, we got a catalyst full week this week. And I'm not even talking about earnings from Snap or Apple or Microsoft or Intel. Well, we're not talking about the big earnings this week like AMD or Ford today, which suggested that their next year's guidance is in the toilet. But then again, it's found on road. I mean, it's Ford. So, you know, what do you expect? Just because they're bragging about, oh wait, no, they're not bragging about their EV sector. They're actually complaining about their EV sector. Doesn't really mean much for anything. It's Ford. So let's instead focus on what matters, which is, in my opinion, what the market is most concerned about right now. And it is why you're not investing in house hack. Okay, I'm just kidding. That was a shameless plug. I'm on my way to the airport right now because I got to do work for house hack. But anyway, no, it actually has a lot to do with jobs. Yes, nobody knows jobs better than the Donald. Or really anybody. Everybody focuses on jobs in the market right now. Why is everybody focused on jobs? Well, because of the data that's coming out this week. We know that we have a Federal Reserve that is data dependent. Okay, well, what kind of data are we going to get this week? Let me just work backwards, because it's literally every day you're going to get some data here that makes you kind of go, oh, wow, yeah, we are getting a lot of data this week. Okay, so working backwards, on Friday, we are getting the BLS, as some like to say, the BS labor report, because it's already November. Congratulations. If you have any challenges left for the end of the year, you have just 2 months left to go before 2024 is over, which means I only have 2 months left to achieve my weight loss challenge goals, and then I have to get into the, in my opinion, harder part, the bulking up phase. Anyway, that's a topic for also a different video. But on Friday at 5:30 in the morning, we are expecting 110,000 jobs. That is significantly lower than the crazy 254,000 jobs that we got last labor report. Now, what was so unique about the last labor report? Well, no, it wasn't that teachers went back to work. We already knew that teachers went back to work in September, and we knew that the seasonal adjustments this September were historically the highest seasonal adjustments that we've seen since like 2011 to 14, somewhere in that range. Crazy seasonal adjustments and crazy numbers in total. But let's actually get to the nitty-gritty, because maybe there's a reason for it. And I actually think there may well have been a reason. Once we adjusted out about 500,000 teachers in the BLS labor report, we were still left with an increase of 785,000 government workers that drove up the level of unemployed workers and drove the unemployment rate down to 4.1%. Had we not gotten those workers, those government workers, we would have had an unemployment rate that would have gone up to 4.5%, not down to 4.1%. So rather than potentially deactivating the SOM rule, we would have really reiterated the SOM rule. But where do these government workers come from? Is this just rigging because the election's coming up? Yeah, that's possible. But the other thing is, maybe that's normal in an election season. See, in an election season, who gets hired like 2 to 3 months before an election? Poll workers. They have to get trained how to count ballots, so that way we know we have free and fair elections. Once we know we have workers that are hired for elections, then we wonder, okay, well, what else could contribute to seasonal quote unquote hiring in September? Oh, catastrophes like FEMA ramping up hiring for hurricanes coming. I'm not saying that's definitely what happened, but it's possible. The downside is both of those job increases are going to evaporate by January. ballots still have to get counted from suitcases. I mean, from wherever they get stored into January. Maybe not all the way into January, but after the election. And FEMA workers are still going to have restoration work to do. Only once that work is done do we get to a position of losing those jobs. So those 785,000 jobs that are government workers, that are not teachers, those might end up evaporating in November, in December, in January. So we might not actually see that negative jobs read until, as late as February, which is also when you would expect to see seasonal hiring for retail sales, like, Amazon holiday workers get laid off. And it's also around the same time you generally see companies reevaluate their budgets because they're like, all right, how was our holiday season? Oh, wow, it was trash. Okay, let's fire people so we have a good budget for the year. Very common. That sets up a disaster for the beginning of 2025. But that's just the data that we're going to get Friday. The Friday jobs report is just the October number, which will be heavily skewed by hurricanes and potentially FEMA workers, and it's going to be messy. So we'll see. I'm taking over, so forget the beeping for a moment. Take all of these numbers with a grain of salt on Friday. I'm taking over because there's this truck in front of me that has like 200 pallets on it, and I'm like, I'm going to keep my distance here from this one. I don't think FSD has the distance recognition yet for when you think somebody's about to drop a bunch of stuff. But anyway, then that's just Friday's data, and that's expected to come in low at 110, but who knows, maybe it'll be like crazy like we had last time. I mean, we were expecting to get 140 and we got 254s. Kooky, okay? Like, we would have been negative had it not been for the government workers. But whatever, it is what it is. Okay, that's Jobs Friday, but we got to work backwards here because what else do you get? Well, on Thursday, you get the Challenger Job Cuts Report. Last month, Challenger's Job Cuts Report mouthful, was horrible. It was a terrible report, but nobody paid attention to it because it was overshadowed by all these government workers. And that's a private survey. It's really important. It was a bad report. You could go look it up. Look up the September Challenger Jobs Report. Just type that in to Google and you will vomit if you actually read it. Employment Cost Index is expected to come in at 0.9. This is not a significant source of inflation. Jerome Powell doesn't expect that. Wages are really going to be a source of inflation. And even when wages were going up in 2023, we had inflation coming down, so we're not really worried about that. There's more of an inflationary impetus from who's going to be president than, in my opinion, there is actually from jobs. In my opinion, we're actually going to go in the opposite direction. You're going to see wage cuts over time, and people are going to be fighting for jobs, undercutting each other. Like, I'll work for less. I'm not cheering that at all. I am just providing that as a warning to you. I think that's coming. We are not going into an era of stagflation or hyperinflation again. We are going into an era of deflation, and this might be unpopular, but I've been singing this song for the last 2 years. Nobody believed me that inflation would go down, as it has been, and now it is, and I think it's going to get a lot worse. Recessionarily worse. Is that a word? I don't know. So Challenger ECI, obviously we get unemployment claims on Thursday, but who cares about that? On Wednesday, that's not a leading indicator at all. On Wednesday, we get the ADP employment report, which is another private survey. We're looking for 110,000 jobs created versus 143. Note, once we start getting around that 50 to 70 range, that's usually when you're recessionary, because those usually get revised down. And remind yourself that we are still not at the level where the yield curve is at such a point where you generally break the economy. We're not at that recessionary point yet. Usually the yield curve has to be positive 50 to 90 to actually cause recession. Then, working backwards again, on Tuesday, which is tomorrow, we get the JOLTS report, Job Openings and Labor Turnover Survey. I actually don't know how much of a leading indicator this is going to be because this is so heavily dependent on the seasonal openings. Like, just because Amazon has a crap ton of job openings for seasonal work, is that the same value as a long-term employed person? So I'm really going to scrutinize this report to see what kind of seasonal adjustments they actually include in it, if any. But my opinion, in case you're wondering why, why did Tesla close down 2%? I don't think this is anything fundamental with Tesla. I already made a fundamental video on Tesla. You could watch that. Keep in mind, I'm back. I'm going to be posting more than ever. And so it's going to take a little while for the YouTube algorithm to get used to me being back. And so it's going to take a minute for it to recommend my videos again. That's okay. It's totally normal. I know that. And I've got work to do here for House Hack, which I'm excited for, which you can talk about in just a moment if you want. And what we're doing, and where I'm going. But this is going to be a catalyst-rich week. So keep that in mind when you're trading this week, or if you're looking for buy the dip opportunities or investing. I think everything is going to be predicated on what happens with these job numbers. Not because we want them to be, but because people are going to be data dependent, and they're going to look at these job numbers for how do we price in the Federal Reserve's activity in the November meeting. Keep in mind, the next Fed meeting is right after the election, so that's in like 2 weeks. And it's a big one, because are we going to get another 50? Probably not. Are we going to get 25? Hopefully, but who knows? Maybe not. The last time the Federal Reserve cut by 50, the Federal Reserve ended up leading the 10-year Treasury to skyrocket just the way it did in 2007, and that increase of that 10-year Treasury yield is exactly what actually created the recession in the first place. So I think the Federal Reserve is flying a little close to the sun here. They're playing with fire, and I'm not really happy about it, but, you know, what are you going to do? It is what it is. So, you know, people stop at this parked car. So people ask me, you know, all the time, like, Kevin, you know, where are you on the bull-bear scale? And I appreciate that. I want to say I think I was wrongfully early on the recession call, but I do not think that I'm wrong on the recession call. So the higher stocks go, the happier I am for you. And the same is true for our financial advice clients. You know, we have a bunch of clients, even people who are just booking intro calls to see if we'd be a fit for them over at stockhack.com. And we have a bunch of people who reach out to us and they say, hey, you know, how can I get into real estate? How could I diversify my stock portfolio? How can I enhance my tax write-offs? Or do you have any strategies? You're an entrepreneur, Kevin. What can I do to minimize my burden this year? We have a lot of creative ideas. This is what I do for a living, is minimizing tax outlay, baby. And so a lot of our clients over at stockhack.com, they're looking at this too, going, look, you know, we know we might not be in a recession right now, but we don't want to be caught flat-footed. We don't want to be caught off guard. So they're seeking the professional help of licensed financial advisors. It's myself and my team. And every single every single bit of advice that goes out of the door is signed off by me. Nobody else signs it off. So I want you to know that. Anyway, I gotta hop on the plane now. I appreciate y'all. Househack.com if you want to learn about our latest investment offering. We're really excited to work for our investors. And my latest motivation, by the way, is kicking Grant Cardone's butt. So I want you to be part of that journey. All right, folks. Thanks so much. We'll see you soon.